Hi, I'm in Toronto at the Rogers Centre. Thought I'd talk a bit about the chart of account. Chart of account is an important element in any financial, any structured quantitative systems that have been built for centuries now. Chart of account defines the balances that will be kept within that system. The transactions are tagged with the chart of account, and then the balances are created based upon the chart of account in most instances. The chart of account has many elements in it today, and a modern chart of account would have started historically, though, with the account number. Account number was simply something that the owner and the bookkeeper decided they wanted to keep track of particular balances by. Thus, customers would have been originally assigned an account number, something that continues today as we sign up for an account. Today's account numbers, though, for customers are kept in a subsidiary ledger, but the subsidiary ledger does the same sort of processing that was done in the general ledger. Account was added to when we added the legal entity. As a bookkeeper started keeping track of the books for multiple different companies, they added a field that said which company owns these balances, these assets, or these liabilities. Add to that a field called the cost center, profit center. That says that these set of balances are owned and managed by a particular person against a budget or against a revenue target. That's a cost center, profit center field. There's new fields that were being added continually, and there's always a tension to try to add more fields to have more balances, because balances answers questions quickly. You can have product types, customer types, book codes, currencies. All of these can be elements of a chart of account. Modern organizations, though, have so many values in these fields that they typically have someone that has to be responsible for not letting people add new values and trying to use existing values for things that have already been defined. They didn't know existed in another company or in another cost center, rather than adding new values to the chart of account. Values in chart of account, when you talk about each individual field, often they're in the thousands to maybe tens of thousands for a large organization. I've seen some that have been in the hundreds of thousands for a single value. When you go to combinations of values across the rows, so when you look at what actually the balances are that are assigned, you'll end up in typically tens of thousands for a medium-sized organization to hundreds of thousands, and even into the millions for a large organization. These balances are what answer the questions that we want. These balances, the things that can be embedded in a chart of account, the meaning that can be embedded in a chart of account can be extensive. I know of an organization that years ago had 30-year-old chart of account values that were used everywhere in the organization, very valuable for the people to be able to tag things with. They decided to model all of the meaning embedded in their chart of account. Using data modeling techniques, they ended up with 122 different entities, different meanings for the chart of account. Things from employee locations to mail stops to HR groups to all sorts of financial metrics were all embedded in the chart of account. The chart of account is powerful because it cuts across the entire organization. Even if organizations merge and bring together two financial systems, someone, in order to make a consolidated view, has to make a consolidating chart of account. The consolidating chart of account will be a summary of all of the financial transactions in the organization for whatever period of time it covers. This power of the chart of account, deciding upfront what balances to keep, and then capturing the transactions being tagged against every financial transaction, is a very powerful concept. The chart of account will play prominently in our discussions going forward as we attempt to describe how one would have to build a metric engine.